But Bitcoin also went from 65,000 call to 30,000 or 32,000 this year. What's going on days where you're looking on paper and it's going, you know, hundreds of millions of dollars at some points down?
Look, I'm running the business just like any CEO is running the business. Like if you were to ask Jeff Bezos, you know, what are you thinking about on days when Amazon stock is down? He would say, I'm not thinking about it. I'm thinking about fix the business, run the business, and the stock will take care of itself. And that's what I think. I'm looking out 7 years, right? I'm saying, how do we educate more people on Bitcoin? What's my next deal that I'm going to do? I mean, if my stock is down, I'm going to issue debt. If my stock is up, maybe I can do a convert, right? What about the software business? How are we going to deliver the best quarterly results we can deliver? You focus on the things you can control. So if I can control it, I'm going to do it. The short-term volatility, you know, you can't control. And so you just wait. You got to figure that in 7 years, the market will sort itself out. In 7 months, it likely will sort itself out. If you want to drive yourself insane, then you zoom in. And if I zoom in close enough, if I just look at 0.0001% of your face for 18 milliseconds, I bet I can find some protozoa bacteria crawling around somewhere and it'll freak me out, right? If I want to, right? Like you're driving yourself to apoplectic fits by inducing this anxiety. So the way I look at volatility is, actually, the truth is, I just say this. It's a benefit. Volatility is the price you pay to get 10x the performance of the S&P. If it wasn't volatile, then would I have been able to borrow $2.2 billion at 1% interest and buy $7.5 billion worth of it, starting with $250 million in capital? I like the fact it's hard. I like the fact it's scary. I like the fact it's volatile. It's volatility, but it keeps going up. People are like, well, how else do you want it to go up, right? I mean, like it's going up with volatility. So I think it's a benefit because it's volatility that pays off everybody that does the research and has any conviction. And it disproportionately benefits people that want to make the investment in the new world, and it transfers wealth away from people that are afraid of volatility. It's not really afraid of volatility. Amazon was volatile, right? I mean, a lot of people made a lot of money on Amazon. A lot of people made a lot of money, even venture capitalists, you know, accept extreme amounts of volatility. I think here you have an example of a liquid publicly traded asset, which is volatile, but in fact, it's still misunderstood by 98% of the public investors. So it's an asymmetric opportunity to buy something which is no less risky than investing in a big tech company, but much less understood. And I think probably the Sharpe ratios would actually bear that out. Correct. If we looked at volatility adjusted yield.
So you have mentioned, and I tend to agree, that Bitcoin is digital gold and it's a store of value. I'm curious what your thinking is behind people, companies, and other countries using it as a medium of exchange. We've seen El Salvador adopt it. What are your thoughts around that?
I really think that for the next decade, the screaming home run architecture is digital currency as the US dollar on top of digital asset as BTC. And I think that every country really wants to move dollars around as the medium of exchange because 100 million companies have their accounting systems wired for dollars. And I think they want to use the store of value. And I think if you had $100 and $99 are invested in Bitcoin and $1 is invested in the USD, you have 99% of the benefit. You don't have to give up anything. If you have $1 million, you put $1 million into Bitcoin and you borrow $100,000 in USD, a stable coin, and then you pay your bill in the USD while the Bitcoin appreciates. So the net balance sheet ratio is 100% Bitcoin, but it doesn't make the currency go away. right? Like MicroStrategy's got more than 100% of its balance sheet in Bitcoin, but we still use the currency. So what I think will happen, if you really want Bitcoin adoption to take off, you don't want to squeeze out the stable coins. I think that the USD stablecoin is actually going to drive the explosion in Bitcoin. The use case of stablecoins up until now has been crypto exchanges settling offshore, right? They're settling crypto exchanges. We didn't use stablecoins at MicroStrategy for anything. We don't use stablecoins to buy Bitcoin, right? So what you want is you want 8 billion people to use a stablecoin to buy coffee. And you also want Amazon and General Electric and Apple to remit cross-border treasuries in stablecoin. And why would you do that? Because you can move money at the speed of light on Saturday afternoon for free. And right now, MicroStrategy can't move money cross borders at the speed of light for free. Would we move USD by a stablecoin? Yeah. Would we move Bitcoin? Well, we might flash it into Bitcoin for a second, move it in another second, flash it back into USD, right? A la, Strike and Jack Mallers. But I actually think that what the world wants, not just the world, every consumer in South America, Africa would love to have dollars in their wallet. They would also love, they know that now. Everybody knows that now. That's 100%, right? Everybody knows they want dollars in their wallet now.